welcome back to the Financial Shepherd Happy Hour. I'm Joshua Casey Garland, certified financial planning professional, owner of Shepherd Wealth Management, and very excited today to be back for another happy hour. As it's been a couple-week hiatus. Welcome back.
Yeah, and I'm Ezra.
Ezra is my cameraman. Everything related to video quality, editing, all the cool stuff you see on the podcast. Basically, his mind works the exact opposite of the way that my mind works. So
yeah.
It's a good time to be together on a Friday, and it's actually been a good week for markets. So I wanted to start with a weekly recap. And just for everybody that's watching this, especially for newer viewers, the reason why that I do all this stuff with the podcast, the happy hour, yes, it's a lot of fun, but I really want to give all my clients and fans of the show the information that they need in a concise manner so they can ultimately make better decisions for themselves, maybe ask better questions for their advisor. And certainly if you're in need of assistance or have questions, you can certainly reach out to me. I'd be happy to meet with you. My number is 513-630-2664. So I mentioned the weekly recap for the market. So let's go over the numbers. S&P 500, positive 3% for the week. NASDAQ up almost 5.5% for the week. Dow Jones 2% to the plus side. Russell 2000, which is your small cap index, up about 3.5% or so. And the Wilshire 5000, which is simply your catch-all U.S. stock market index, up about 3.7%. Interestingly enough, though, energy, which has been the only sector of the S&P 500 that's been positive so far this year, actually had a negative week, down 1.5%. It's actually had a little bit of a sector pullback in the energy space over the last several weeks, which leads me to an interesting thing that actually happened today, at least that we got the news today, is that Warren Buffett has increased his stake in Occidental Petroleum to almost 20% of the company.
Oh, I did not hear about
it. It's a $10 billion investment into one company, that being Occidental, obviously a major oil and gas producer, and that sector has been highly profitable, as we've already mentioned here. But he did it during a period of time. So he already had an investment in Occidental, right? Pretty large one, I think almost 10%, maybe a little less.
Right.
He essentially doubled his investment after energy had a pretty substantial pullback here over the last couple of weeks. It's still positive, over double digits in that space so far in 2022. But he's doing exactly what he's been preaching to the public for 60 plus years. He's going to do his homework. Once he does his homework, looking at the fundamentals of a company's balance sheet, income statement, checking out their management team, all the due diligence that we try to do here at Shepherd Wealth Management. The only difference is I can't go knock on a door of Occidental Petroleum CEO and their board of directors saying, hey, I want a little inside look at things. But
that'd be nice.
Other than that, we try to accomplish the same thing here. So he's being greedy when others are fearful in a space that's already had a really good run. So he obviously believes the long-term prospects for positive return for investors, not only at Occidental, but now Berkshire Hathaway, since they own nearly 20% of the company, will continue. It's not just going to be a flash in the pan sort of approach. Now, obviously, he can change his mind, and maybe things will cause him to change his mind, but he's doing exactly what we try to do here for clients and making a rebalancing play when others are being a little fearful. And the reason why they're fearful has nothing to do with the fact that energy companies are not going to make profits hand over fist this year. They're making record profits this year, which is great for shareholders for sure. But he's also looking at the future growth and prospects for the organization as well. So I'm very excited to be a Warren Buffett shareholder. I'm a huge fan of Buffett himself. And I think that the future is certainly going to be bright, not only for the energy space, but also for shareholders of Berkshire Hathaway. So that was some interesting news that recently came out today. But the hot news that came out at 8:30 today was the labor market. So I want to read from the Barron's article here. The economy added 372,000 jobs in June, which was well above consensus estimates of 250,000 jobs, which kept the unemployment rate steady at 3.6%. So why does that matter? Why should anybody care to pay attention to something like that? Well, we've been running around 380,000 jobs per month so far this year, which has kept the unemployment rate below 4% for quite some time, which is good. Generally, it's very difficult to see a recession when you got a labor market that has under 4% employment. The Fed would define full employment at 4%. So we're under 4%,
Nice.
which is where we were pre-pandemic. The major difference is the labor participation rate is not the same as what it was pre-pandemic. We were running around 6.1% for those that were in their prime working years, and now we're hanging out around 5.8%. So we don't have as many people back to work as we once did. All that has to say for the Federal Reserve, which is going to have, we'll be looking at the core CPI data. So the inflation data is coming out late next week, and they're going to have an announcement, not too distant future after that inflation data comes out. And they're just simply going to say, hey, we have a very strong economy. The wages for employment has gone up over 5.5% this year and hanging steady above 5%. Even though that did come down a little bit this month, which is probably good from an inflation standpoint, so we don't have this wage spiral going on. However, when we have employment numbers as low, or the employment rate as low as it is, and jobs continuing to grow, there's 2 openings for every person out there looking for a job. It's very plausible that the Fed is going to continue their rate hikes fairly aggressively at probably 75 basis points is what the market would expect the Fed to do. But we're actually going to get the inflation data coming out here next week. So that's going to be obviously very important to not only the market, but also the decisions that the Federal Reserve is going to have to make here. So it's likely that nothing's really going to change the Fed's mind as far as increasing rates by about 75 basis points. With all that being said, the last major thing that I wanted to make sure that we brought to the attention of viewers is, well, with all this volatility that's going on, likely going to see the Fed increase rates to the tune of 75 basis points again. What can we look forward to? When can we look forward to the inevitable recovery? I would assume that's on your mind is, because first thing you said when you walk in here is like, hey, I had a week where everything was green almost.
All green, baby.
It's got to feel good. Haven't seen a lot of that this year. However, we have some interesting data from Sentiment Trader, specifically the gentleman that wrote this is the owner of the research company here. His name is Jason Gottfried. So he has a couple really interesting data points here, and I'm going to read directly from the article. So the S&P 500 has suffered 15 days with more than a 2% intraday loss over the past 50 sessions. That ranks among the highest of heavy selling since 1962, right? So pretty good sample size here. So again, S&P has suffered 15 days with more than 2% intraday losses over the past 50 sessions. Haven't really seen any of that since 1962. All right, ready for this?
Ready.
Previous instances occurred near the troughs of major declines, with an average 1-year forward return of 21.5%.
Wow.
So it's been a rough year for investors to buy the dip, although that is something that we've done here for clients at Shepherd Wealth Management. The good news is that things seem to look brighter as we get closer and closer to finding a bottom. I don't believe that we probably found a bottom yet. Simply because the Fed's going to continue to increase rates, not just here, but globally, right? So they're tightening across the globe, which does have an impact on stock valuations. The earnings for companies have been nothing but stellar, just like what they were the previous 3 years when we had positive double-digit returns. The major difference this year is the Fed is increasing rates and investor sentiment is ultra low, one of its lowest since they've started taking that survey back in 1953. Actually, it is the lowest. University of Michigan Investor Sentiment Survey that they do every single month came in at 50 last month. We'll find out more in a couple weeks what that survey has to say now. But when you have investor sentiment that low and the market's already pulling back as much as they have this year, I'm not saying that we found a bottom, because history would say that the S&P, could lose another 10 to 12%. If you see the actual averages being hit in a bear market, the bear markets tend to see the S&P pull back on average about 31%, and we're hanging out around 18 to 19% drawdown in the S&P. So it's possible that we haven't found a bottom yet, but all the data would suggest, including the article that we're reading from here, is that we're nearing a bottom, and the future looks obviously pretty bright, given that bull markets last a heck of a lot longer than a bear market. So to continue the data point here, the spikes in 2% intraday losses lined up with some of the worst equity markets and most investor uncertainty. while not perfect, they also lined up with some of the best forward returns. Over the 12 of the 12 precedents, 10 preceded double-digit one-year gains, averaging more than 21%, like we just mentioned. There was only one that didn't have a double-digit gain. That was in 1973. So the future recovery of this bear market certainly will happen at some point. We're not going to hang around 9% inflation, forever. This is not the new normal. This is just a process that we're going through, even though it's been the worst start of the year for the stock market since 1970, when Richard Nixon was in office. So it's been a while since we've seen anything like this.
Ooh.
It kind of gives you some perspective, though, right? Like, yeah, this is not all that uncommon. We just haven't seen anything like this in a very long time. But history has a way of repeating itself. And the one thing that I found that was funny that Buffett said, I know I quote him all the time, but I put this in my most recent newsletter to my clients, is that the one thing that we know about human beings is they don't learn from history. And that couldn't be more true, because investor sentiment is so terrible right now. That tells me that there's a whole lot of people out there that need programs like this. They need somebody to bring this information to them, because they simply don't either have the time, desire, or the knowledge to go find this information for themselves and interpret it for themselves. So if that's you, welcome to the program. We're going to do this every single Friday for about 15 to 20 minutes, just kind of giving you the nuts and bolts of what happened that week, some important data points about what's happened in similar times in history. And we're also going to have a little fun. Pick your favorite beverage of choice. We're here in the office today, so mainly due to weather conditions, usually we do this outside or maybe at your local pub. So
local Northern Kentucky watering hole. Huh?
Certainly still working on all of that.
Yeah, keep it going for sure.
So that's everything that we got to share for this week. I hope you all enjoyed it. This is certainly something that's a lot of fun for Ezra and myself. And if you have questions, you can feel free to post them right here on our YouTube page, since we're live every Friday right around 4:15 or so. And you can always text us questions as well at 513-630-2664. My name is Joshua Casey Garland. This is Ezra Kellerman, our video editor, all things behind the scenes. We love having you here. We hope to see you again next Friday. Hope you have a great weekend and stay safe out there. Take care.